Hi, I'm Cindi Hagley with the Hagley Report. Everything you need to know about real estate today. There's been a lot of rumblings in the last couple of days, and I've had some client calls about what's going on with real estate, what's going to happen with real estate with the volatility of the stock market. First of all, I believe that the market is simply going through a correction. I don't think we're going to have a crash. I don't see anything like that in the forecast. Bottom line, the Feds raise the rates, and when that happens, there is usually a slowdown in the market. Let's talk about a potential housing bubble. First of all, the only thing you need to know is there is no housing bubble on the horizon. If you remember back in 2008, prices fell because of bad lending habits. If you had a pulse and could sign your name to a document, you could get a loan. They threw income requirements totally out the door. That's why we saw all the defaults, the short sales, the foreclosures, homes selling for pennies on the dollars. It was because of lax lending guidelines. Not so anymore. You have to have a job and you have to meet income requirements in order to get a loan. How silly is that? That would be sarcasm. Okay, so here's what's going on. Is the market slowing down? Absolutely it is, but it's simply a correction. It is not a bubble. It is not a bust. Next year, the California Association of Realtors chief economist, her name is Leslie Appleton Young. She is an amazing predictor of what's going on. She is forecasting that we will see a 3% increase in the values of homes for next year. Is it slowing down? Yes, in some price points, and here's why. When interest rates rise, fewer people in the market are going to be able to afford a home. Right now in California, only 1 in 4 residents can even afford to buy a median-priced home. So what happens is the home at the $1 million mark, $1.2 million, $1.5 million and on up, those home sales are going to slow down because with interest rates rising, people can't afford as much home as they could have maybe 6 months ago. So what happens, that compresses the inventory, right? So while the higher priced homes are sitting on the market, the lower priced homes, there's more of a demand for those. So those tend to sell a little bit faster. They tend to hold their value better, and they tend to have greater appreciation year to date. Now, buyers, yes, buyers are hanging out right now, and they're trying to decide when the best time is to put their toe in the market. In August, 40% of the people that had their homes listed for sale, a full 40%, ended up lowering the price of their home in order to get them sold. 40%, that is huge. It used to be a seller's market. It's not a seller's market anymore. It's not a buyer's market either. Right now, I think it's a very, very flat market. Why? Buyers are waiting to put their toe in the water. They're waiting to see if prices fall. They're waiting to see what's happening with interest rates. Now, I think interest rates are going to rise. I think next year we're going to be somewhere between 5 and 5.5%. This year we were around 4 to 4.5%. So that's a lot of buying power that's being taken away by the Fed when they raise interest rates. Here's another prediction from the chief economist from the California Association of Realtors. Leslie Appleton Young predicts that in 2025, the state of California is going to be a majority renter state, which means more people are going to be renting homes than buying homes. Why? Because of interest rates, because of a compressed demand on the limited inventory at lower price points. So what does that mean to you? If you are sitting on equity in your home currently, $400,000 or $500,000, millions of dollars, whatever it might be, I suggest that you buy some rental property. And by the way, the trend is not condos and townhomes. The trend for real renters is moving into single family homes. If I were you, I would be looking out in the Central Valley. I would be looking at Stockton, and there are some great neighborhoods of Stockton. I would be looking at Lodi. I would be looking at Patterson. I would be looking at Manteca. You can buy a brand new home in the city of Lodi with nice upgrades for $500,000. You can rent that home very easily and cover your nut. That's not your nut, but covering your monthly expenses. So bottom line, If you're not sure about the real estate market, if you're thinking about moving, pick up the phone and call me. Just call me. I will give you an unbiased opinion of the market as it pertains to your needs and as it pertains to your home. By the way, I'm just not a real estate broker. I am also an investor. I've been investing for 20 years. I know what I'm doing. And right now, my money is going into the Central Valley. If you're sitting on heavy equity in your home, you want to sell, maybe you want to move out of state to be closer to kids, pick up the phone and call me. There is a new product out there. It's called a deferred sales trust. So sort of like a 1031 exchange for investors, but nothing like it at all, if that makes any sense. So if you've got several $100,000 profit in your home after you take your exemptions, and there's a lot of people in the Bay Area that are sitting out there with millions of dollars, you don't want to be taxed on those capital gains taxes. Call me. Let me show you this program. It will save you tremendously on capital gains. It's a code in the IRS codes, and it holds up. A lot of corporations have been using this for decades. Homeowners and investors are just starting to use this product. It passes the IRS test for audits, which God knows I've been through some of those. So pick up the phone and call me. Let me help you avoid capital gains. The next thing, guess what? I am working now through the holidays. Fourth quarter is generally my busiest quarter. Why? I don't go home for the holidays. This is home. A lot of agents take off now. You're not going to see them until after Super Bowl. I'm here. I'm working. I am representing buyers. I also have a team of folks representing buyers. But the big thing I do is represent sellers, and I set price records. Pick up the phone, call me, ask me questions. My number, 925-867-4663, and be sure to follow my podcast wherever you get your podcast from. That podcast name is Finding Cindi. Have a great week. I'll talk to you soon.